How's it going, traders? It's the Pup of Wall Street back with another weekend review. Today we're going to look at my top sectors going into next week. If you enjoy my content, make sure to like this video and subscribe to my channel down below. These two actions will help more people see my work. Also, don't forget to hit the notification bell so you know when my videos come out. And if you have any questions, please leave a comment down below. Let me know what you think about this video. And lastly, keep in mind, this is not financial advice. I'm doing this for educational purposes only. So let's dig into these charts. Taking a look first at the Dow Jones Industrial Average, ticker DIA. And so last week, we are looking at the weekly chart, but last week you could see for 2 weeks now, we came into this golden pocket. That's going to be your 618 and 65 retracement. That's from that swing low to that swing high. And as you can see, we made the nice move up, and now we are coming right into that zone and reversing. So what I'd be watching for, not necessarily an inside week, or excuse me, an outside week here, but I'll be watching for a break over the last 2 weeks high, right? So that's going to be right around 323. So over 323, then I think we start to move up to this 50% retrace at 332.92. And that should put us pretty close to the top of this broadening, falling wedge here. So let me actually turn on that 30-week moving average. We'll take off the 50 and the 200. And you can see that's probably going to be the area I would watch first. Maybe we can hit that next week, 328.50. You could see back here in the past, it had acted as resistance. We did break out here, but put that inverted hammer at the 618 before gapping down 3 weeks ago, continuation down 2 weeks ago. And like I said, this week, nice bounce off of that golden pocket. Let's take a look at the SPY. This is the S&P 500. We had a falling wedge breakout back in July. Nice continuation, move higher, inverted hammer here again. Let's see where that hammer came in. That came in very close to the 618 retrace right there. So let's get that here. And yeah, we failed at the 30-week moving average. In fact, gapped below it, came back, tried to retest it, failed. And this actually did put in an outside week. So an outside week, basically, when you have the current weekly candle, or the current candle that you're looking at, as a lower low and a higher high from the previous candle. You could see it engulfs this candle, so it is a bullish engulfing candle. And we did stop at the 382 retracement at 407.74. So where do we go from here? Well, we can take a look at our 50% retrace. That's going to be at 421.57 if we break 407. I think, again, that 30-week moving average, that's going to be a key level to watch. We didn't quite backtest the COVID low anchored VWAP, although we did backtest this swing low anchored VWAP from the June lows, and we bounced right off of it and pushed, like I said, to that 382. So what I would be watching for this week, a break and hold over 407.74. I think, 410, 413, and then potentially 417 and 421 would be my targets to the upside. Here are the Qs, another bullish engulfing candle. This one also failing here at the 30-week simple moving average. But we are still trading below the COVID low anchored VWAP. So I think that's going to be that first big test. That's going to be around 313. Then we have the 30-week moving average right at around 317. Then you have this downtrend line that we've been holding under since our highs back in November of last year. So yeah, I think for tech, we had a strong close to the week last week. And what I'd be watching for early this week, can we see a continuation move off of that strong close? Here's small caps. Again, nice strong bounce. This one off of the 618 at 177.87. The level I'm watching is really right around 187, 188. You could see it acted as support back here in early 2022. And then that support then turned into resistance. We broke back over it, broke through that 30-week simple moving average, but then we ultimately failed 2 weeks ago And now this week we came back up and tested that 188 level, which is right at the 30-week simple moving average. So for this week, what I'd be watching, can we get back over 188 and hold? I would be targeting 194 to the upside. So those are the main sectors. Let's take a look at some of the sector ETFs. Biotech has been pretty hot. Have this in a potential 5-wave completed move to the downside. And now it looks like we're setting up with an inverse head and shoulders. Here's your right shoulder. Here's your head. Here's your left shoulder right here. We still could consolidate for another couple of weeks within that right shoulder. So just keep that in mind. This is really just, a pattern setup that's happening over time. Obviously, the setup has started in the beginning of this year. So it's gone, 9 months already. So what I'd be looking for is just a nice continuation over these highs here at 88. Maybe we can see 95 in the next couple of weeks. That's what I would be watching for. And then possibly, maybe into October, maybe testing and breaking through this inverse head and shoulders. So one thing to note, we did break through that 30-week simple moving average. We hit that level, and now we're back testing and bouncing right off of that 30-week simple moving average. So plenty of room on RSI, very similar to the under indices that we looked at. MACD hasn't quite gotten back over that zero line, but has positive momentum and did cross under or cross over in the head. So yeah, I think we still have a decent amount of supply here. And so that's why I was saying it might take a few weeks to kind of churn through that supply. But once we get over and break and hold on a weekly basis over 95.48, we could see a nice move up to this supply zone here, like right around 108 to 116. So keep biotech on watch. A lot of names shaping up really nicely and moving. So these are just a few of the names that you could look at. You can go into like ETF.com and type in XBI, and you'll get the full list of holdings. And these are pretty equally weighted. I think no one name has more than 2%, I believe. All right, let's look at the next sector. This is going to be XLY. This is your consumer discretionary. So when you know consumer discretionary is moving, that's generally pretty good for the market. And so we had a big bullish engulfing candle here. We pushed back through that 30-week simple moving average. Let's get that right tag on right here. And let's properly anchor volume here so we can get a sense of where our supply and demand zones are. So you can see here, we've got a pretty big supply zone up here right around 175 to 185. So as we continue to grind higher, this would be the area I would watch for price to stall out and possibly consolidate. But for now, it looks pretty good. Let's see what we have here. Let me properly draw this out. Yeah, so I mean, this looks pretty good. You could also see, possibly, maybe another inverse head and shoulder setup here, right? But more on a, instead of a flat top, it has an angular neckline. So this possibly could be what we're seeing here. And then what we would do is we would measure the head to the neckline, and wherever we break out, that would be your measured move. Now, interesting enough, that measured move, if we broke out, let's say in the next couple of weeks, that measured move takes us right back to these previous highs. So yeah, I mean, consumer discretionary, definitely a sector that I would be watching. I don't have the sector makeup for that, so I do apologize. Let's see if it's maybe on the daily chart. Yeah, I think, yeah, there it is. Let me throw that back on the weekly chart so we can go back to that. And so, yeah, so these are going to be your XLY holdings. Amazon, Tesla, McDonald's, HD, Nike. Those are some of the names that you should look at, if we continue to break higher on XLY. Here's XLV. This is your healthcare. I know we talked about Johnson & Johnson a couple of weeks ago. We've got a 2-dot squeeze setting up. So we got a 2-week squeeze that's setting up here. MACD, still uncertain of direction. RSI is holding right at 50. We're still holding under that 30-week simple moving average. But what I'm noting here is a bounce off of this level here. We gap below it, but we came strongly through it that next week. And then again, another bounce off this level. So this is looking like it's trading, for the most part, trading in a range. Right, so your range bottom is right at around 125. Your range top is going to be right around 137. So, this is the range that I would watch for. As we come closer to the top of the range, I think that's where you have to be a little bit more cautious in taking trades in some of these names. All right, here's Solar. Solar's been acting very, very nicely for quite some time now. I would say for most of the year, right? Since we made those lows in February, we came up, made a new lower low, but bounced pretty wickedly off that. I mean, you could see these long wicks at the bottom, right? Holding $60. And now we're flagging here, holding over this downtrend line. So let me get volume anchored properly here, back to our previous highs. And you can see we're still in a bit of a demand zone where we are consolidating between 82 and 90 for the last 5 to 6 weeks. So what I would be watching for here, can TAN get over 90.67? That's going to be your 50% retrace. Then I think we have an 8 to 9 point pop higher to 99. Let's just call it $100. You could see at that 618 retrace, look at the prior highs here, right at 101.46. So that 618 right at $100, that's going to act as pretty good resistance if we get there. So just keep that in mind. Something else to note, we did have a squeeze fire off that first week of August, and we're already 7 weeks into the squeeze firing. Generally speaking, I look at a squeeze at 6 to 8 candles. So in this case, 6 to 8 weeks. So we're coming on week 8 next week. So you just want to be careful. Can we continue higher? Of course. But I generally see these squeeze moves. The squeeze becomes a lot less relevant after about 8 candles. So just keep that in mind. But this is looking pretty good. Holding over 82, over 90. I think we could see 100 in the next couple of weeks. Last but not least is utilities. We've been talking about utilities for a couple of weeks now. Yeah, it's been showing relative strength. Last week, nice bounce. This week, I noticed a lot of the days where the SPY was either down or sideways, utilities were up. And they were at least green, if not holding break even while the rest of the market was red. And even coming into the end of the week, it was pretty strong with the bounce in the overall market. So yeah, these are some names that you could look at for the utilities sector. They kind of move similar to like oil names, so they're not very fast. They're certainly not like tech stocks, but definitely a lot safer play if you're looking for more, some of those more conservative plays that are out there. So that is going to be my wrap for the sector overview. I hope you enjoyed this video. And keep in mind, I do put out another public video that's going to be my top tech charts, which I go over as well. So take a look at that video. I'll throw up a link up in the top. And again, appreciate your time this week. I hope you had a great weekend, and good luck in the markets coming up.